Many Forex traders fall into the same trap. They see a stochastic cross or an overbought signal and they jump in, only to get whipsawed by a false move. The truth? Indicators like the stochastic oscillator are powerful, but only when used in the right context. That's where the ADX comes in. Let us talk about how to build a resilient trading strategy using these two indicators. One for momentum and one for trend strength. Step 1. Understand the tools you're using. The stochastic oscillator shows you momentum in overbought, oversold conditions. A % K line crossing above % D below 20 equals potential bullish reversal. A % K crossing below % D above 80 equals bearish shift. But it can give false signals in sideways or weak trends. That's why we need confirmation. The ADX tells you if there's a real trend behind the price action. A DX below 20 equals ranging or weak market. A DX above 25 to 30 equals solid trend. ADX rising equals momentum is building. Stochastic shows potential timing. ADX tells you whether it's worth taking the trade. Step 2. Strategy, logic, combining the two. This strategy works best on H1 or H4 time rents for trend clarity. Here's the process. Look for ADX. Above 25 and rising gives this, tells you a strong trend is forming. Aligned with the trend direction, give us use price action or a simple 50 EMA. Price above 50, look for long entries. Price below 50, focus on shorts. Wait for stochastic pullback plus cross. Gives in an uptrend. Wait for stochastic to drop below 30 and cross upward. Gives in a downtrend. Wait for stochastic to rise above 70 and cross downward. Now, you're not just reacting. You're entering pullbacks and strong trends. Step 3. Real-world example. EUR-USD. Let's say your USD. Let's above the 50 E. ADX is at 28 and rising. Stochastic drops to 25. Then the % K crosses above % D. You enter a long trade at the next candle close. Stop loss just below recent swing low or 1.5 AT or take profit. 2 times risk or win. Stochastic reaches overbought plus ADX flattens out. This system prevents you from buying tops or selling bottoms and focuses only on high momentum trades inside trending markets. Why this combo works? Most traders lose because they treat every signal as equal. But trading is about filtering noise and entering with purpose. Stochastic gives you the trigger, a DX gives you the context. Trend filters give you alignment used together. You build a system that's logical, reliable, and repeatable. Final thoughts. No single indicator will make you profitable. But when you combine momentum and trend strength, you gain real clarity in your trades. This stochastic plus ADX strategy is perfect for traders who want clean entries, strong trend alignment, less emotional noise. CTA, join Innohedge, where strategy meets discipline at Innohedge. We teach you how to turn smart indicators into real systems. You'll learn how to filter setups, manage risk, and grow as a structured, confident trader. Click the link in the description. Join Innohedge today and start building a resilient strategy that works in real markets.